In this lesson, we are going to talk about the payments section of the 1040. Now, it's important to note that this section is where we report both payments that the taxpayer paid toward their tax liability during the year and refundable credits, or the refundable portion of credits. That is because payments and refundable credits are treated in the same way, which means if a taxpayer paid more in or has more benefit available than the total tax, they will get a refund. We've covered some refundable credits in previous lessons, like the additional child tax credit and the refundable portion of the American Opportunity Credit. And in our next lesson, we'll talk about the earned income tax credit. So in this lesson, we're just going to focus on the various ways our taxpayers may have or could make advanced payments.
So as I talked about before, we're kind of heading towards the bottom of our page 2 of the 1040. And just to show you where we will be seeing our payments come in on the 1040 is this line 25. And it can be federal income tax withheld from forms W-2, forms 1099, or other forms. And it can also be estimated tax payments or amounts applied from a prior year. So that's line 26. And these are the payments that go towards that total tax that we had calculated in line 24. Now, TaxSlayer is going to combine all of the payments that the taxpayer had made over the course of the year, so long as we do a good job of putting in the federal income tax withheld on each form as we're adding them in. And of course, each form has a space for federal income tax withheld. So we just want to be watching where those are and just really making sure that we are entering them into the return, because we don't want our taxpayers to get overcharged for their taxes. We want them to get credit for what they've already paid in. So I thought this would be a good chance too for us to kind of review some of the types of forms that we've seen. So if you remember from our wages section, we talked about our tax system is what's called a pay-as-you-go system. So as you are earning money, if you are an employee, then your employer is withholding tax for you, so that you make sure that you're paying along as you're earning the money, and then when you get to this when you file your return, you are doing essentially kind of a reconciliation. How much did I pay in? How much do I owe in the final calculation of things? And if I paid in too much, I get a refund. If I paid in too little, I need to pay a little more. So on W-2, the employer withholdings come in on this box 2, and we looked at this a little bit in our wages section. So just again, making sure that if there's an amount in this box which employers are required to withhold, we should be seeing an amount in this box, get it in on the return. So aside from wages, we have our sources of unearned income. And if you remember, we talked about our 1099 INT, which is for interest. And there may not have been any tax withheld, but again, we're always looking just in case, because our taxpayers might have requested that taxes be withheld. In certain circumstances, taxes may have been required to be withheld, but I don't anticipate we would see that a lot with our clientele. So on 1099 INT, that federal income tax withheld is going to show up in box 4, and there you can see it highlighted. You're going to notice that on a lot of the remainder of the forms that we have, the box that we're looking for is box 4. And then I also want to remind you that sometimes 1099 INT comes in on what's called a consolidated 1099. So it comes in with the 1099 div for dividends, or the OID, which is original issue discount, and some other 1099s. They all come in on usually a brokerage statement, and you'll see all 4 forms listed on one page. And then instead of boxes, it'll be lines, but the line number corresponds to the box number. So as long as you are looking at the line numbers, you'll know to enter them into the same place as you would have entered the box numbers. So what's box 4 here, it would be in a list form, and it would be line 4. And that's what you would enter in as federal income tax withheld. And then here's our 1099 div for dividends. Again, that box 4. So on that consolidated statement, if that's what you're looking at, you would go to the little section with 1099 div, look for line 4, and that's where the federal income tax withheld will show up. And then our 1099-R, which is for our retirement accounts, pension plans. Again, box 4 is where the federal income tax withheld would show up. And we may not always have any amounts in box 4. This is another area where our taxpayer might opt to have taxes withheld, or taxes may not be withheld. This also can be one of the sources of confusion for our taxpayers who maybe took an early distribution, because tax will have been withheld from their distributions if it was an early distribution. And so sometimes the taxpayer will think, oh, well, you know, I shouldn't have any extra taxes because the organization where the account was already withheld the taxes. And so we would maybe need to have a conversation about, well, they did withhold some taxes, but you might still see an additional amount of taxes because of that penalty. Our Form 1099 SSA also has a box for voluntary federal income tax withholding, and that's actually box 6. So most of our taxpayers don't tend to have any withholdings on this, but there again, they might have opted to, and so we want to make sure to get that into the inputs in the return. Form W2G, that's our gambling winnings, also has in box 4 the federal income tax withheld, and sometimes there will have been a withholding requirement, and there will be withholdings. Again, our taxpayers could have opted to have some withholdings, or we might not see any withholdings at all. Form 1099-G we're going to most often see for unemployment compensation, in which case this form will look more like a letter, but you'll know from the top of the letter it'll say that it's a 1099-G for unemployment compensation. And the taxpayer may have opted to withhold federal income tax, or they may have not opted to withhold federal income tax. Our other Form 1099-G that we're going, well, if we were doing Oregon returns, we might see real commonly is state or local income tax refund, but that tends to come on what looks more like a postcard. Now, in our discussion of 1099 miscellaneous, we were really referring to it mostly in regards to jury duty pay. So I think we're not likely to see a lot of 1099 miscellaneouses with amounts in box 4. A lot of the other boxes on this form are things that are out of scope for our program. As we were going through all of those forms, of course, we talked a lot about, you know, some of these withholdings are optional. The taxpayer can opt to withhold. And some of them are mandatory, but it's important that we talk with our clients about their withholdings, because taxpayers have a lot of control over their withholdings. And so if they find themselves in a situation where they're consistently owing more than they want to owe, then they have the ability to change their withholdings through their employer or through some of these other forms if they have other sources of income. And then again, if people are consistently getting a huge refund and they don't like getting the huge refund because it would be more beneficial if they had that money along the way throughout the year and they weren't having that taken out of their paycheck, there again, they can change those withholdings so that they adjust the amount that they get in refund or the amount that they have due at the end of the year. And the IRS website has a tool that can help them figure out what they might be expecting for taxes for the coming year. So we can't do a lot to help them with their withholdings once they come in for their taxes. We can't help them with the withholdings that were for that tax year, but they can still adjust their withholdings for the coming year so that they don't have, any ugly surprises in the new year, or they don't continue a trend that they don't want to continue. You can see here the screen on the IRS app. They will need to have some information with them. They'll need to know, what pay period they are in the year and how much has been withheld, and how much income they've made. And then they need to have some idea about, what kinds of adjustments they might be qualifying for, deductions and tax credits. And then it estimates about how much they should withhold and how to adjust their forms to get their refund or their amount due where they want it to be. Form W-4 is how an employee can adjust their withholdings with their employer. And a lot of employees now may not actually see this form. Their employer might have an electronic W-4 through an employee portal, and it may not look layout-wise like the W-4. But I did want to show you what it looks like and bring out that kind of the flow of this form. So the things that it asks about are, filing status. Is the taxpayer single, married, filing joint, head of household? And then it asks about dependents, how many qualifying children and how many qualifying relatives or other dependents this taxpayer might have. So if you have a taxpayer who's thinking about adjusting their withholdings, you can point out to them on their return where this information is, so that when they go to change these inputs with their employer, they know what they're looking for. And then I also wanted to point out that there's a line a little further down, I'm not showing the whole form there, where employees can opt to have another amount withheld, just another flat amount on top of the regular withholdings. So this is really helpful with some of our taxpayers who maybe there's more than one spouse and consistently that's causing problems. More than one spouse is working and that's consistently causing problems with their withholding. It never withholds enough. They can choose to withhold a little bit more on top of that regular amount that gets withheld. So that's a really helpful line. And these are two forms that we've looked at before with our retirement income and Social Security income. Again, just showing you that our taxpayers can opt to have withholdings by filing this form W-4V for government payments. So that might be their Social Security or it might be their unemployment. And then the W-4P is specifically for pension and annuity type accounts, those other retirement accounts. So there are options to with other sources of income to have withholdings if the taxpayer thinks that that's going to significantly affect that source of income is going to significantly affect their taxes, then they may want to have voluntary withholdings. And another way that our taxpayers can control their withholdings is through estimated tax payments. And this is most commonly used with taxpayers who have a Schedule C, a business, because in that case they don't have an employer who is taking out the taxes as they earn the money. They have to do it themselves. So there's in this 1040 ES form, there's an estimated tax worksheet that helps them estimate what they think their income will be over the course of the year. And then there's this voucher that, they fill out and send it in with the payment. And these payments, the due dates are quarterly. So this is another way that our taxpayers can make sure that their withholdings during the year are enough to cover their tax liability. And estimated payments don't have to be sent in with the paper voucher and a check. They can also be made online at irs.gov payments. You can go into the direct pay system and choose the reason for the payment as estimated tax and where it will apply to and the year that it's supposed to apply to, and then the payment can just be made electronically. And then right on the 1040, there's another option for taxpayers to withhold towards their estimated tax for the next year. And that's down at the bottom. They can choose to have their refund go towards the next year's tax. So we'll want to be checking with our taxpayers to see if they did that in the previous year, and that's something we would need to enter into TaxSlayer as a payment, or if they would like to do that for the next year. So then let's talk about extensions. So taxpayers are given an automatic extension of 6 months to file their return. They do have to file the form 4868, to claim this extension. If they just don't file, then there is a penalty associated with that, and it's a little steep. So if our taxpayers want an extension, they need to be filing this form. It's a very simple form, really. It just asks for their personal information, right, their identification, and it does ask them to estimate what they think their income is going to be for the year. And this can be really important for business owners or Schedule C filers especially. As basic certified volunteers, you wouldn't be probably seeing this as much, but there might be some other situations where a taxpayer is working to get a form from another entity and it's just delayed. So they can estimate what their income tax will be and put their identification on this form and file it. But the extension is just an extension on the time to file. It is not an extension to pay. So if they think they're going to owe any more taxes, they want to be sending it in before April 15th with this form. Otherwise, they're going to end up with some penalties. So as I talked about before, there is a failure to file penalty. I won't go into depth with that, but even if our taxpayers are filing for an extension to avoid that penalty, if they don't pay the full amount of their tax liability, then they're going to end up with the failure to pay penalty. And that penalty is 1/2 of 1% for each month that they don't pay their tax liability, and that can add up to 25% of whatever tax is due on their return. And that plus the interest, so it's the penalty plus the interest, and the interest amounts to 3% plus the federal short-term rate, which changes periodically. You can always look it up. This penalty TaxSlayer would calculate it automatically if we were looking at a return with this penalty. I don't think we'll see that because we won't be extending beyond the due date. But just so that we have enough information to educate our taxpayers that, you know, an extension of time to file is not an extension of time to pay. So if they think they're going to owe more tax, they should send in a check and maybe even a little extra just to be safe. Another penalty that we might actually see on returns is an underpayment penalty. And that penalty happens if there's over $1,000 in tax owed when they file their return. And then if the amount of withholdings or payments in is less than 90% of the current year tax liability or 100% of the prior year, which is helpful because that gives our taxpayers, if they had like a really surprise source of income and they didn't quite withhold enough for the current year, as long as they withheld 100% of the prior year, then they won't get this penalty. But, you know, we could see a situation because our tax system is supposed to be pay as you go. They want to encourage you to be making those payments throughout the year and not just wait till the end of the year. So, so again, you know, that's for amounts owed more than $1,000, and if the withholdings weren't more than 90% of the current year or 100% of the prior year.
And then it is possible that some of our taxpayers may have overpaid amounts for Social Security taxes, and that is because there is a cap on the amount of income that is taxed for Social Security. As you can see, it's reasonably high, so we don't see a lot of this with our clients, and it's most likely to occur where a taxpayer has 2 or more employers, or there's an employer error, in which case Form 843 can be filed to request a refund, and that's done with the return. It's important to note that for joint returns, the excess amount paid is figured separately because each worker is responsible for their own Social Security tax, regardless of marital status.